Oftentimes, price action tends to do things that may seem out of control. In reality, these things are reactive, these things are counter-reactive, and the retraces that we are experiencing on XRP are nothing less than those situations there. So let's go ahead and find out what's going to happen with the price action with XRP next, guys. Welcome back to the channel. Please do me a favor, hit that like button, subscribe to the channel, do everything necessary to get this thing to live long, thrive, and survive. My name is Arca. I'm actually coming at you here today at 9:38 p.m. Pacific time, Wednesday, September 24th, and this is live price action right now, 284.97 on spot. And I will say that, yeah, you know, we were experiencing, we talked about the resistances of that very, very known zone of the 301 area. Yeah, you know, I get it. We didn't really reach the 301 in the first place. It looks like a 299.69 kind of did it here. Well, that's arguable, seeing that it could be based on Coinbase price action, right? It could have happened in Binance. It could have happened in Kraken, who knows, right? But yes, that was the implication there. Guys, now, what do I mean by me saying that these things tend to happen? Why would we face a rejection like this? Why would God put us in the way of that kind of nonsense, right? But it's the counter reaction is what I mean here, guys. This is an area of breakout, right? Look at this resistance that we're facing here, right? We have resistance, 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 candles and candles and candles and candles of all that kind of crap right there. We have the fake out, right, which feels like we're going to break out, but then we go all the way back down. So we have support, 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 and we have the fake out, right? And then we go all the way back up. These things are repetitive. These things are fractal. These things are natural to price action, and sometimes they could give us some answers. Yesterday's criteria was that should we close above this specific zone here, 287.07, then we would get a burst to the upside here, thus validating the 4-hour and hourly bullish engulfings from a bottom trend. Well, that's kind of what happened, and we got that topside move. Now that we are making this topside move, we are potentially coming back to validate this area here as a support. Now, if we are ready to make the upside continuation based on this support grab, then sure, let's go ahead and move on to the upside. But I'm not here to guess, and I'm not here to tell you that that's what's going to happen based on just whatever is presented here. Okay, guys, so let's go ahead and find out exactly how much downside we have, and should we have a bounce coming in soon. Before we do that, guys, I need to remind you here, please. I know that we have thousands and thousands of people watching on YouTube. I want to remind you to make sure that when you join the Discord trading team, remember that I will never reach out to you first. I can't stress that enough. I will never send you a friend request. I will never message you. I will never say anything to you whatsoever. Okay, guys? And also, I only have one Twitter X, right, guys? My X profile is just one of them, and it's not for crypto. It's just me. And I've joined there for, since 2022. Okay, guys, so I need you to be aware over those things. Do not let your money out. I'm not asking what crypto you're trading. I'm not doing it. So if you are, experiencing some weirdness there, so let's try to find a way to get you to validate that it's me, right? Maybe join the trading team when I'm live, right? I always show my face. You can always ask me there. Okay, guys, but with that said, let's just go ahead and continue on with the analysis here. Now, I guess I can consider this some type of a bear flag, or maybe even a rising wedge. And this would be in light of the USDT, right? So your Tether dominance is what we're going to be looking at here on this chart. Take a look. All right, so this is your weekly time frame, guys, okay? Weekly time frame, which is very particular here since we are getting, in 3 days, 20 hours, we're getting the bi-weekly close. And in just around 5 days, we're getting the monthly close as well. Now, seeing this bar here kind of starts to look at this, to me, this kind of looks like a hanging man. It's failing to break the top. Next, going back to this weekly time frame, you're catching these slightly higher highs, right? So I assume that we might want to resist anywhere above into this area here, specifically at around 4.62%. If it is, or roughly, 4.63, right around there. So if it is that fact, then we would essentially be drawing out a pretty bearish formation, wouldn't we? Just like this here. So we would resist at that point. Why don't we go ahead and change the color on this and continue, right? Here we go. And also, let's make it a little, let's just make it thicker. All good. This here would be our implied zone, right? Okay, now let's draw in our bottom regression. So should our bottom regression start from here, then we have a pretty nice amount of contact points on the way up through this regression, right? So this could show us that we are in this kind of ugly type of ascending formation here. Now, remember that this formation does not have to actually go all the way to our typical read of 60 to 70% to the apex of the triangle. It doesn't have to. What it does have to do, or I guess what it would do per se, is oscillate. So it would oscillate between the areas of the bounds of the regression lines. So, okay, what about this? What if I'm here to tell you that, okay, guys, we are actually at a potential top here, which just so happens to be close enough to the support that we were talking about a little bit earlier on XRP. Well, it's starting to make a little bit of sense even still. Now, do we have any further downside? Always, always, always there's further downside. This, for example, here, this 2.8372, right, $2.8372, that area is completely confluent to many other candles down here. Take a look at those, right? Very nice. All you have to do is just look back to see if you have any other candles that are heavy in confluence like that. Well, this would be another zone here. Should we face any further downside with discretion, I would tell you that this is probably the bottom zone that I'm thinking of with a liquidity grab. And I would believe that it would be like this. This is your liquidity grab target. This would be the range just by discretion for support before we move to an upside. Okay, so let's go ahead and leave it like this. And we'll also make this thing kind of, brilliant green, so that we understand that this could be an area here of immediate support. We already know that these were support, right? We already know that these were drawn in yesterday as conditions. That's all good. I'm not dismissing these whatsoever. I'm just giving you the data that I'm seeing presently. So should it be valid? Great. Should it, should you hate it? I don't know what to tell you, but this is what I see. Okay, now, if we, let's tag them up. Let's make sure that we have these targets listed on there. We'll try to make this video as short as we can as well, so that we can take a look at some opportunities in the market here. All right, guys. So there we go. I'm looking at a potential bottom side here into those targets. Now, where do we move to the upside? Well, this is technically just an equal reaction, right? So this, it probably means that this 0.5% could go all the way up towards that 314 even still. In fact, does it do it? Could it actually still validate a 314 even in light of resisting from that $3 zone? Well, let's take a look. Let's see if it does shed any light into those targets. Well, it kind of does, right? It's leading towards around a 313 already, 312.94. Pretty nice. We were already suggesting a potential 311 and even into the targets of 314 in light of the regression levels from ATR yesterday, right? So all good. I like it. Let's really take this granular now, though. Let's see what we have in store for this, and let's block out the drawings completely. Let's look at volatility versus momentum starting from a granular time frame. Let's use the buy minute, and let's see how this continues using historical volatility. Let's see. Okay, very cool. We're starting to get a pretty nice upside bias on stochastic momentum. Momentum bars are looking pretty damn good here in the buy minute. 3-minute time frame is already giving us an upside bias crossover as well. We're kind of more or less full throttle here on volatility. This upside is cascading still into the 4-minute time frame. Let's continue. Let's speed it up, right? Still an upside here on the 5-minute time frame, upside into the 10, 15 upside, 30 upside, hourly upside. Yeah, it's still kinked on that upside, right? There we go. I think that we may be able to see a total upside of 2 hours. So this means that from the opening of your bi-hourly bar, we have an upside average of around 4 cents. So what would that be? Your current ATR top on this would lead you back to 291.15. So let's go ahead and kind of plot that out here, right? 291.15, I would say a hard target on that, guys, would, I would say roughly around these targets here. I would say 288, 288.79, or, let me see. 288, I got you, hold on. Give it a break. Let's do 287.95 to roughly these targets up here. Yeah, the confluence is pretty nice to the 50% regression on these, 50% dispersion of those areas. Otherwise, still very confluent to the areas of 287 that we were looking at as a breakout condition. Okay, cool. So this is now our breakout zone. We need to figure out if we're going to continue to the upside from there. Unfortunately, we're still getting downside from your 2-hour time frame. This means likely the 2-hour time frame reaches its statistical top. Liquidity grab could be focused right at about the 290 zone. Pull back, right? So pull back, how long does it last? 2 hours down, 3 hours down, 4 hours down. We're looking at stochastics here, right? 8 hours still down, right? Still down on the 12-hour. Still down on a daily. Okay, still this is becoming a challenge here. 3 days down, 4 day. Let's see, hold on. 4 days down, 5 days still on a downside. You'll be surprised how this turns out, though. Still downside on a bi-weekly. Let's go ahead and check out a 3-week time. Let's see, a 4-week time, still down. Let's go to the 1 month. There we go. 1 month worth of downside. This could have already happened though, right? So let's take a look. Your monthly downside is saying that we would reach an ATR low of around $2.18. This reached around $2.69. I don't think that's gonna happen here. Why? Because this is printing at the moment an inverted green hammer with 5 days to close, almost 6 days to close. So reaching a low of that magnitude when we're running just 13 cents on a daily ATR, I don't know that it can actually do that, specifically for the fact that we're about to experience a gigantic fair value gap here. Okay, well, does that mean that we are going to reject this? I think so. Now, how would I know that? How would I say this, that we're potentially gonna ignore this? Well, guys, the cool thing is knowing the probabilities of retraces. So your weekly time frame is usually retracing. It's decompressing. The decompressing average is roughly around 6.33 hours prior to the closing of the bar, right? Okay, so multiply that times 2 and you get your 12.62, anywhere between 12.5 and 12.7 hours prior to the closing of the bi-weekly. So now you're looking at what? Times 2, that 12.5, right? So that would mean 25 hours prior to the closing of the 1 month bar, there could be a retrace or decompression. So that means that it would be slightly over 2 days. So a little bit over like 2.25 days, you would be experiencing a retrace and a decompression to the 50% of this monthly bar on average. But wait, there's a lot more to talk about though, because in 5 days and 20 hours, your 3-month time frame is also closing. So wait, hold on. Did this 3-month time frame start retracing early? I actually think so. So now when you start decompressing, especially a 3-month time frame, like a quarterly bar like this, the average means that you would actually catch an early decompression for a higher probability retrace to the upside. And to me, this doesn't look so damn bearish at all. So oh my goodness, one more thing. We actually have a 9-month bar closing too. And that 9-month bar in 5 days and 20 hours is decompressing its 50% already. Wait up. So this already decompressed. We went during these 9 months to pretty heavy lows, 265s, right? 261s or 64, whatever that was. That's way over your 50% and way early for this bar. So the thing that we're experiencing here, it's just a decompression from your larger time frames as we come into their close. And I don't know about you, but closing a candle like this doesn't really speak bearish to me, because in 2 days, the monthly time frame will start to decompress towards its 50%. And where is that? Let's go find that out real quick. Okay, so here is your monthly bar. Decompressing this to the 50% during these next 5 days would mean that we would reach a target of roughly 290, 292.87. And we just spoke of a retracement based on this current situation, right? What was that target? I think we gave a 290, 291. And here are our resistances. Check it out. 290.05. We have a 289.51. Even a resistance level of down to the 288. So, okay, great. I honestly think that our statistics are running pretty much in line with our discretion here. Pretty good, right? All right, cool. So I think I'm going to stick to this analysis just the way that I spoke of it. I expect there to be price action down into these levels here. And I do expect there to be a potential continuation to the upside in light of, in light of the monthly time frame retrace, the decompression. Okay, guys, so heads up, buckle up. Potential downsides could exceed 281.74 into the 280.68, and that could happen in the immediate short term before we can actually continue on to the upside. I know that we still have this liquid bottom here. Okay, so anything that I said here may be completely wrong, but I'm gonna side with the bulls here. Okay, guys. So I'm just gonna leave that there just in case. But I'm kind of siding with the bulls here. Remember that, okay, team? So I think this is a pretty good place to leave off. And should you have any questions or concerns, definitely reach out to me, guys. But these are your targets right over here. Please be careful. Do not over-lever. Make sure to manage your risk. Make sure to manage how much you enter, right? All right, guys. Well, I think, Then we'll speak very, very, very scary Larry soon. All right, team? Adios. And, adios. Please take whatever I do show and iterate within these videos as just a form of entertainment, as I cannot suggest for you to buy, sell, or hold any assets whatsoever. Ever, 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 ever. I need you to do your own due diligence, and everything will be cool. But with that said, team, I wish you well. A very, very good rest of your night and or day, and I will catch you at the Bell Mañana. Adios, team. Oh, yeah.